Most people don't feel poor, but they don't feel free either. They earn money, they pay bills, they upgrade their lifestyle, and somehow they stay in the same place. This is the middle class trap. The middle class often looks successful from the outside: a stable job, a decent car, a comfortable lifestyle. But comfort can be misleading, because looking stable is not the same as building wealth. For most people in the middle class, their entire financial world is built upon a single pillar, one source of income: their job. This single stream of revenue, the bi-weekly paycheck, is the engine that powers their entire life. It dictates where they live, what they eat, and the opportunities available to their children. It's a deeply ingrained trade-off: their time and skills exchanged for a predictable, steady flow of cash. But this predictability creates a dangerous illusion of security, because if that paycheck stops, the entire structure becomes critically unstable. Consider a short, hypothetical scenario: a sudden illness, an unexpected company restructuring, or a family emergency that requires you to step away from work. For those relying on a single income, the countdown begins immediately. The average emergency fund, if one exists at all, often covers less than 3 months of expenses. This transforms a temporary setback into a potential crisis, where every decision is dictated by a dwindling bank balance. This is the very definition of fragility. It creates a constant, quiet financial pressure that hums beneath the surface of daily life. It's the mental math performed in the grocery aisle, the deferred vacations, the hesitation before fixing a rattling car engine. They may earn enough to survive and even maintain the appearance of comfort, but they don't earn enough to feel truly free. Freedom is about having options, but when your survival is tied to a single employer, your options are inherently limited. You can't easily walk away from a toxic work environment, take a year off to pursue a passion, or invest in a promising but risky idea. The golden handcuffs are tight. This dependency fosters a deep-seated fear of risk, forcing a conservative approach to life and career, not by choice, but by necessity. The dream of a side project or a new venture often remains just that: a dream, exhausted by the demands of the primary job that pays the bills. This isn't a personal failing. It's a structural trap. It's the cycle of earning just enough to have something to lose, which makes the prospect of losing it all the more terrifying. As income grows, expenses grow with it: a better apartment, a newer car, better restaurants, more subscriptions, more comfort. Every raise creates a new standard, and instead of building wealth, the money disappears into lifestyle. Debt often becomes part of the middle-class lifestyle. Car payments, credit cards, personal loans, buy now, pay later. Debt allows people to look more successful than their assets actually support. But every monthly payment reduces future freedom. Many people stay stuck because they fear uncertainty. Investing feels risky. Starting a business feels risky. Changing direction feels risky, so they choose safety. But sometimes the safest path creates the slowest growth. The real problem is not income, it is the lack of assets. Without assets, money only comes from work. But with assets, money can grow even when you are not working. This is the difference between income and wealth. The middle class is difficult to escape because it feels comfortable enough, not painful enough to force change, not free enough to feel successful. It becomes a life of quiet tension. Enough comfort to stay, enough pressure to worry. Escaping the middle-class trap is not a single dramatic leap of faith. It doesn't arrive with a lottery win or a sudden inheritance. The path out is quieter, more deliberate, and far more attainable than most believe. It's a systematic process, a framework for intentional action. It begins with a simple commitment: to assess your reality, reduce your financial drag, build your income base, invest your surplus, and protect your progress. First, you must assess. This means looking at your finances with unflinching honesty. Where does every dollar truly go? This isn't about judgment. It's about gathering data. You cannot change what you do not measure. Next, you reduce. This is the art of spending less than you earn. It's not about deprivation, but about intention. It's canceling the subscription you forgot you had. It's questioning the upgrade. It's consciously avoiding lifestyle inflation when your income grows. Then, you build. Before you can build wealth, you must build the capacity to generate it. This means learning skills that increase your income. A side hustle, a certification, a new expertise, these are the foundational blocks of your financial independence. With the surplus, you create, you invest. Consistently. Not with frantic trades, but with automated, disciplined contributions to assets that grow over time. This is where you turn your labor into capital and make your money start working for you. Finally, you protect. You build an emergency fund to absorb life's shocks without derailing your progress. You secure your foundation so that one unexpected event doesn't send you back to the start. This entire system can be managed in a simple, weekly 30-minute habit loop. A small pocket of time to review, adjust, and reaffirm your direction. These are the small decisions, repeated over weeks, months, and years, that compound with unstoppable force. Each choice is a single brick, seemingly insignificant on its own, but laid consistently over time, they build a fortress of financial security. This is how you break the pattern. Not with one grand gesture, but with thousands of tiny, deliberate steps that change the entire direction of a life. So we arrive at the end, but also a beginning. We've journeyed through the architecture of the middle-class trap, seeing how it's built not from laziness, but from a blueprint we are all encouraged to follow. It's a system that cleverly disguises consumption as progress and debt as a necessary tool for advancement. It thrives on our dependency on a single paycheck, fuels itself with lifestyle inflation, and is reinforced by a deep-seated, rational fear of taking risks. The core of this system is a subtle, powerful trade-off. It asks us to make every single day. Exchange a little bit of your future freedom for a little bit of immediate comfort. A nicer car payment for 5 more years of work. A bigger mortgage for a longer commute and less savings. The trap isn't a cage of iron bars. It's a comfortable couch in a room with a locked door. It rewards following the path, staying in line, and valuing the appearance of security over the substance of it. And if you truly want to escape it, the path forward isn't about earning more, so you can spend more. That is simply building a more luxurious trap. The escape begins with a fundamental shift in your personal accounting. You must stop measuring your success by the quality of your lifestyle, and start measuring it by the quantity and quality of your ownership. Lifestyle is what you rent from your future income. Ownership is what you build for your future self. It's the small business you start on the side, the index fund you contribute to every month, the skills you acquire that no one can take away from you. Each dollar directed toward an asset is a vote for freedom. Each dollar spent on a depreciating status symbol is a vote for comfort. This isn't a call for radical austerity, but for radical intention. It's a quiet, personal revolution that starts with one question, asked before every purchase, every career move, every financial decision. Does this increase my comfort, or does this increase my freedom? The answer will show you the way out. The choice, as always, is yours. Start building your ownership, one small piece at a time.